Way to go, Picasso.
Yeah, seems like to me as well. Use this.
Yeah.
Before we start, can I just ask a question on the chart you were showing on the weekly, the US dollar weekly?
Sure, you can. Come on. Now, let me just quickly answer this question first. This one, yeah?
Yeah.
All right, is it?
Actually, no, not that one. The Euro US dollar live chart on the weekly.
Yeah, I'm coming to it. Not here. I'm talking about Azad. Yeah, sure. Azad makes sense.
Yeah.
Makes sense. Makes total sense. So if you look at this right here, for example, let's say this guy was mitigating some form of supply, perhaps it even grabbed liquidity, indicating that there could be certain, correction, and you just wait patiently. You have to take EOS inducement to sell this. You see, the purpose of the substructure is because you don't know if price is going to continue lower or is going to break higher. So if you were waiting for the break, then you miss the trade.
Yeah.
So here now, I'll sell this guy. Then when price came all the way here, there's certain type of liquidity that I might be looking forward to here. And when it comes there, I'm going to buy this guy, or I'll wait for this to happen. Then I'll buy this guy. Then I'll take partials on this sell, buy this, then I see which one, where it wants to break to. Okay, this is what you want to do when you're playing this. However, sometimes when you understand what the higher time frame is, perhaps the higher time frame shows you something like this. Sorry. Yeah, something like this ending here. So, with this now, I can tell, okay, this is just here. Even all of this is still a substructure to this, but still the 5 minutes, I can try catching this cell. When price comes here, gives me this, and this is sufficient, and I look forward again, it gives me something like, then I can buy this. So I know that in this case, given my higher time frame liquidity cycle, this is more than likely going to play out compared to this. You understand, everybody?
Yeah.
So, Anil?
Yeah.
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 Yes, sir.
Let me annotate. So what you were saying, so this is external. So from here, low, all the way up here, then
I can't
low.
see your annotation. Okay, I can see it now.
Yeah. So low, high, because it broke it here, and then low, and then the high here. So then you're saying that from between here and here, all of this is substructure, right?
Yeah. So now you see, you marked it wrongly. How? Just one little detail, you get thrown off. You were right to mark this. You're right to mark this. Right? You're right to mark this. Hold on. You're right to mark this here. What about this transaction that took place here? You can see that candle is different, and it led to a new high. Can you see that? Then after that, there was this guy here, right? Whatever happens there, then there was this guy here, there was this guy here. Pay attention to all of those transactions that are happening outside of those external structures. Then you have this guy here, this guy here, this guy here, and finally we break here, go here, 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 then here, then here. See that? Then here.
Yeah, that answers my question. Yeah. So because I marked that wrong, that answers my question now. I was going to say that. Why did you say that? That
so if this was all straight like this, I would say this is internal to weekly, which is going to be everything here will be a substructure of the weekly, definitely. So it doesn't still change how you analyze, doesn't still change anything. It just helps you to get a better understanding and helps you to put that precision to every transaction that's happening in the market.
Yeah. Because if I say that this is the low and that's the high, then this will be substructure, and it will be substructure. But I will still be analyzing this on my weekly time frame and still see what it looks like on the daily. The only thing here is that the moment price breaks here, this becomes my next inducement level. Yeah.
Compared to this right now. But before I can say this is my next inducement level, obviously this is weekly. Daily comes before weekly. So perhaps this will be my daily inducement level too, to pay attention to first before I can even look at this. So at the end of the day, you're still going to be looking more or less at the same liquidity level, but you might just be calling it daily or calling it weekly, which is not bad in as much as you understand the intention.
Yeah.
Is it clear, everybody? Anybody got any other question before we proceed?
Thank you.
You're welcome. Anybody got any question?
Not from me.
I have one quick one.
Okay, please ask.
For example, here you have the swing, right?
Yeah, I'm with you.
And this will be substructure. Like, let me. What does that mean?
I think there should be information.
That will be like the substructure from that leg.
Hold on, let me, sorry, you come again. Let me clear the screen. Yeah, now you can go.
Wait, like that will be the substructure from the leg.
Yeah, sure. So all of this here, you actually marked it. You tried from this low to this high, then to this low, to this high, then to this low, to this high, then to this low, to this high, then to this low is nothing but the substructure of this high and this low.
You essentially look at that swing point, the swing point above.
Yeah, the swing point. Yeah.
So, like, we should mark the swing, and inside the swing, we should mark like the, let's say, like the candles we saw there in that time frame to
yeah,
you
see, the thing is, a number of people make these mistakes, right? They do this, and after price breaks here, then they come here and mark fake POS, and then they mark inducement. Do you see that? They'll be like, oh, but it was a significant structural point. That's why. So when this broke here, taking out this low is inducement. No, that's wrong. This is nothing but a substructure. So when you're marking it, it doesn't mean that you're not paying attention to this. You're paying attention to it. But what you need to understand is that this is going to be more significant for your trading on the daily time frame than it is on the weekly. Does it make sense?
Yeah, I think so. Like you're going to go to a daily time frame to to.
Yeah. So now, if you want to see the information here to work with, you more than likely see it on the daily time frame.
Okay.
See that? Now, let's take for example, Nick. Let's take for example here. Let me delete this and this. Let me clear everything actually. Now, looking at this weekly, okay, the next, where is price sitting now? Between here and here, right?
Yeah.
Internal to the weekly is what?
Daily.
Daily. Now, if I have a clear structural build here, does this mean that my weekly is bullish?
No.
No. But these are significant structural levels on the weekly, clear on the weekly. So it's a substructure to the daily. On the daily time frame, I could still have something like this, even still have it like this. So where you have that clear structural levels on the weekly, being the same thing on the daily. Do you understand what I'm saying?
Yeah.
Okay, so you pay attention to both of them, both that daily and this weekly substructure.
Okay.
Okay.
Yeah.
So when you get practicing, you're going to learn more about it, because that's when it's pretty much new to a number of us here. It's not completely new, but you didn't know before. So once you get practicing, you begin to realize, oh, this is what Yusuf was talking about, and oh, I don't think you still understand this. And then I'm just a DM away. Just send me a message, and as soon as I'm free, I would respond. Okay.
Okay. Okay. Thank you. Cheers.
You're welcome. You're welcome. Nice. Drum rolls. It's time to talk about liquidity. I love talking about liquidity. It's like liquidity is the second part of the market that I love talking about the most when I'm teaching. The first part of the market is the one we're going to touch after liquidity, which is algo market structure. Algo market structure is sweet. Really, really sweet. Now, liquidity. What is liquidity? Let me hear your view. I believe everybody has been waiting. Everybody has been waiting for this session.
Yeah.
Yeah.
What is liquidity? What's your understanding of liquidity? What is liquidity? What do you understand by liquidity?
Liquidity is value to move the market.
Is what?
It's a value. It moves the market.
A value that moves the market. What did you say? Did you say liquidity is a value that moves the market?
No, it's two things. Liquidity is value, and liquidity also moves the market.
Okay, liquidity is value, and liquidity moves the market. Okay. So I'll come back to you, Antoine. Somebody was saying something.
Liquidity is for somebody to buy, somebody has to sell.
For somebody to buy, for somebody else to sell. So liquidity has to be provided. Okay, that's not bad. Anybody else wants to try?
Liquidity is money.
Basically, the orders.
Liquidity is money, right? I think Abib, did you say something?
Yeah, liquidity is the orders.
Liquidity is the orders.
Yeah.
Good. Do you know that you are all correct, but only one person is close? You see, the thing is, the definition you gave everyone is still this definition that a typical smart money traders would give about liquidity. Except for one. But even that one, I don't even know if the person is sure about it, or but let's see if the person is sure about it, and that person is actually Abid.
Yeah.
So
Basically before joining Algo, I've seen stories, highlights of your Instagram handle. From there, I got them.
No, you won't escape my question. Don't worry. Okay, liquidity is the orders. What orders?
It's basically the buy orders and the sell orders, stop losses, take profits, transaction basically.
So you're close. So let me not probe you too much. Just a little bit out of it there. Well, let's go straight into it, guys. How, when you go to the supermarket, you provide value by giving them money, right? And we all know liquidity is money. So what you're doing in the supermarket to get that item, you're injecting money into the market, into the store, so you can get the item, like he said. So injecting money into the market. So now, I ask you guys this. How is money being injected into the market?
Buy and sell orders.
No. Yeah, buy and sell orders. How? How exactly? Do you just go to the market and say buy orders, sell orders?
Like an exchange.
Inducements, isn't it?
You see, if I reframe the question and I put it in much more simpler terms, you all get it. That's how simple liquidity is. But unfortunately, it's really tough for us to think in that direction. Unfortunately, it's really tough for us to think in that direction. Now, let me make the question as simple as possible. How do you place your orders in the market? You go to your MT4, you pick up your MT4, you want to place an order, right, on your MT4. How do you place the order? Yeah? What type of order do you place?
What was the question?
Yeah. How do you place your orders in the market on your MT4? How do you place your orders? What type of orders do you place?
Limit.
Market execution.
With a limit or market execution.
You see that? Limits. Is it just limits or stop orders? Those are pending orders, right?
Buy, stop, sell,
Yeah.
stop.
Exactly. Buy limit, sell limit, or execution. Right? Then what again? How do you set your orders? Is that all? Don't you set stop losses?
Yeah.
Again, what again is available on MT4? Don't you set break evens?
Take profit.
You're in profit. Don't you set take profit?
Yeah.
Other than all of this, is there any other way you put your money into the market?
Yeah.
Is there any other way you put your money into the market other than any of this?
Buy stops and sell stops. Have you got that?
Buy stops and sell stops.
We got everything, I think.
No.
It's there already.
No.
Those are the limits and the stop orders. Do you see that?
Yeah.
That's everything here. Everything here. Everything here, except for take profit, is how you put money into the market. Take profit is just how you take money out of the market. Everything here is how you inject your money into the market. Everything here is how you provide liquidity to the market. Is it clicking gradually, everybody?
Yeah.
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 You can see that it has nothing to do with equal lows or equal highs or other flows or whatever. Because liquidity is money. Money is value. The money has to be injected into it. So how do you inject your money into the market? It is through the orders. That's like you go to the supermarket, you're making an order. So how are the orders being represented in the market? Being represented as what? Execution orders, limit orders, stop orders, break even, stop losses. Take profits is not liquidity. You are not providing it to the market. You're taking it away. So your job is that of a thief. Your job in the market is that of a thief because you're thinking outside the box. And what does that mean by it is that of a thief? Your job is to be able to identify where majority of the people trading the market have their orders sitting at. Then you wait for that orders to be taken because that is the liquidity. And once it is taken, you now join the transaction. Otherwise, you will be the liquidity. Is it making sense?
Yep.
That's why you see the popular saying, if you can't find the liquidity, you are the what? The liquidity. You can't find the liquidity in the market, you are the liquidity. How weird.
Oh, true.
Who would have thought? I was thinking, I was like, damn, who would have thought this? Who would have thought that everything about liquidity is right in my MT4? I just open up, I'm like, okay, market execution, buy order, limit order, and all of those things I see every time I trade is actually liquidity. Can you imagine? Anyways, let's see what this guy has for us. So now, let's say you have market structure, which are made up of transactions, right? So you have higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? So in all of these, okay, in all of these, let me add one more. I would say higher high, so higher low, higher high. So let me add that. So in all of these, we would agree with me that I have one transaction, two transactions, 3, 4, 5, 6, 7, 8, and 9. We all agree now that all of these are not just structural push. As much as they are pushes, they are also transactions, right?
Yep.
Yeah.
Hold on, I'm just checking the assignment. Now, let us what's the name? Let us look at this guy properly. I'm going to write them out properly. So that way we'll just follow them firstly. So first, let's say stop losses. Second, let's say our pending orders, which includes the limit and the stop orders. Then execution orders. Then, what is that? A break even. Okay, so 4 of them. I'll drop them here. Now, let's start with the stop losses. You, as a trader in the market, when you pick a trade, looking at all of these transactions, where will you put your stop loss? in most
There are the
majority
lows.
of the traders trading the market, where will you put your stop loss?
Under the lows.
The lows. So we agree there's liquidity here, right? Liquidity here, liquidity here, liquidity here, liquidity here, the lows. Is it just the lows you put your stop loss?
No,
If you're selling this shit, won't you put your stop loss at the top?
the highs, yeah.
Right.
So liquidity here, liquidity here, liquidity here, liquidity here. Now, I hope we're together, everybody. Now, we know with this now, we know that liquidity is always sitting on every highs and every lows in the market. We just need to start putting a proper structure to it for better understanding. So we have that. All right. So you see, we have liquidity. This has been tackled. What about pending orders?
You put pending.
Place.
Pending orders, we have mostly for what's the name? For breakout traders and then reversal traders, right?
Mm-hmm.
You find breakout traders having their buy stop here. And if they want to see that it is going down, their sell stops here. And then you have reversal traders having their what? Buy limit here and putting their stop loss here. And if you want to go back, it comes there. So at the end of the day, where is the orders still being placed? It's still within this high here and this lows here, which is still the same level of that of the stop losses. Am I correct?
Yes.
Let's be logical together. So that means we know where this liquidity is usually sitting. And it doesn't sit without the stop losses on those highs and those lows too. Because out of these 4 items on my screen, out of these 4 items on my screen, sorry. Okay, 2 is most important. And the 2 of them is what? The stop loss and the break even. Why? Because these 2 are the key ways that money is being taken away from you in the market. Once price hits the stop loss, oh shit, you lose the trade. You lost money. Once price hits the break even, oh shit, you lose the trade. You lost money. Those are the 2 most important. They are the ones that guide the other ones strictly. Now, we have the execution orders. As a retail trader, as a trader in the market, where do you more than likely place your execution orders? Everybody.
Mostly when you have an inducement. You don't know that it's an inducement.
As a rational trader, forget about inducement. If we didn't talk about inducement, you more than likely will not think of an inducement. An inducement only happens after liquidity has been provided. So forget about inducement. Okay, as a rational trader, remember the last time we talked about being rational, and we said, where would you want to buy from next? And everybody was pointing somewhere here. Am I correct?
Yeah.
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 That's where most people want to buy from. So most people are always looking forward to execute their trades within the structural points. Is it making sense?
Yeah.
Yeah.
Within the structural point. In most cases, you wait, maybe POI, then you wait after price comes there, you wait for break of the structure, then the retest, you get into the trade, and then you wait for it to play out. That's how everybody goes about it. True or true?
Cool.
So you see that's where we fashioned our execution orders into the market. Now, finally, we have the break even. Can you break even on a trade that has not been executed?
No.
No.
So once your trade has been executed and it's in profit, what do? You tend to break even. And where do you tend to execute your trade the most? At the structural point. So most often than not, where do you break even? Within that structural levels where you executed the trade. Does it make sense now?
Yeah.
Yeah.
And when you break even, you have just added liquidity to the market. Because when the market comes here, it takes you out, it grabs that liquidity. I hope it is making sense, everybody.
Yep.
Yeah.
Yeah.
Now, now, this can become really, really complex. Okay? This can become really, really, really complex because it makes you need to start thinking, okay, where could the pending orders be? Okay, where could the execution orders be? Where could the stop loss be? At every point in time, and that is a lot of tax right there. But no, you don't have to do that. You don't have to do that.
Yusuf's got a magic indicator to tell us.
Okay, you are your magic indicator. I have vowed with the market never to use any indicator. Okay, you don't have to do that. Why? Because I have divided this whole thing about liquidity into three to enable you identify them easily and trade the market consistently. I've divided them into three. Now, the three of them goes like this. I hope you guys are enjoying the approach to liquidity now.
Yeah.
So
now,
transactional and order conducted.
You see something, community, yeah? So the first type of liquidity that I identified is the transactional liquidity. Sorry about that. Guys, it's shit. The first type of liquidity is the transactional liquidity. And this is the liquidity for correction. That's the first type of liquidity. The second type of liquidity is structural liquidity. And that is the liquidity for continuation, which is popularly known in the community, we must have noticed, as the last high before the main high, or the last low before the main low.
I was wondering what this thing stood for.
Now you know.
Yeah.
Then finally, we have the inducement liquidity.
Sorry, Yusuf, I just had to get the door. What was that last bit? The LMB/MH.
The structural liquidity, which is the liquidity for continuation,
yeah,
is popularly known in the community as the last high before the main high and the last low before the main low.
Okay.
Then we have the inducement liquidity, and this is the liquidity for expansion. And that's the liquidity that often gives you MSU. Does it make sense? Are we together?
Yes, sir. So far.
So let's start with structural, right? Now I looked at the markets. Pay close attention, as time frame structural analysis is actually part of this. So please pay close attention. I looked at the market, and my 1 hour structure, for example, okay, 3 time frames are important in your trading. 3. H1, then we move to M5, then we move to M1, 3 time frames. Now, the H1 tells, for the H1, your job with the H1 time frame, given the trading plan, is to identify where you are in the market. Are you writing that down, guys, everybody?
Yeah.
Yeah.
Good. The H1 is there for you to identify where you are in the market. Sometimes you have to relate, please write that. You have to sometimes relate the H1 with the 15 minutes. That is, if the H1 isn't clear, you can use the 15 minutes to identify where you are in the market. Also, you can relate the H1 with the H4 when the H1 is too noisy. Anybody can type out those writings you guys are doing and then drop it in the group for every other person to benefit from, okay? Now, once you know where you are in the market, the next part of your trading plan is the what. There are 3 parts of your trading plan. We have the where, the what, and then the how. The where, the what, and then the how. The first one is where are you in the market? That is, where are you in the liquidity cycle of the higher time frame, which revolves around H1, M15, and H4. Then the second one is the what. What do you see on the M5? So the M5 Okay, we talked about H1 earlier. The M5, okay, is there for you to identify what you're looking for in the market in terms of MSU or EPA. Nice, Rodrigo. I love this. Of course it is right. You did amazingly well. Love that. Okay. The M5, for what are you looking for in the market in terms of EPA and MSU? Then the how. How do you intend getting into the trade? Then, after all of this has been properly followed, the last but not the least is the target. All you just have to do is to target the next liquidity level to the best of your understanding, because you are going to have to identify the liquidity levels you can see based on your own understanding and the work you've put in. So you can tell confidently if you're going to target the higher time frame liquidity level or you're going to target the lower time frame liquidity level. Just the most important thing is remain consistently profitable. Okay? Good. So I'm with you. You say what?
I have a quick question. It may be something to address later, but is there, when it comes to targeting your TP, do you have a minimum PIP or RR value to go after? Because on some charts, I see where some entries are very short. So do you have a minimum target to
That's why I said target the liquidity level. Don't worry, that question you've asked, you will get your answer as we proceed now.
All right, cool.
So can I just confirm? So the how is only on the 1 minute, because that.
Yeah, the how is only on the 1 minute.
Yeah. But
How did you intend
what is on the 5 minute?
Mind you, sometimes you can actually enter the trade directly from the 5 minutes if you're okay with the stop loss.
Yeah.
It doesn't have to be that you have to go to the 1 minute, but just follow it that way. Then you begin to combine it, being your own flexibility and it being, objective too.
Yeah. Perfect.
Good. So we're going to talk about transactional liquidity. Then you're going to see how I'm going to add all of this to. Excuse me, sorry. You see here, you have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. It could be in any form at all. Now, we all know where liquidity is sitting, right? Once you look at this chart now, you can tell where the liquidity is sitting based on what we've treated now. But which of this liquidity is which? Transactional liquidity is the liquidity for what? Correction. The moment price broke this high here, it means price took out this liquidity. We are always, once price takes out this high, we know that an uptrend has been established first. That's the most important thing. You need to understand the trend first. The trend is an uptrend. So once this liquidity here is taken, we know transactional liquidity has been taken. Okay, so since transactional liquidity has been taken, we are expecting a correction. That is why it is called transactional liquidity. Now, here, again, transactional liquidity taken, we expect a correction. Transactional liquidity taken, we expect a correction. Transactional liquidity taken, we expect what? A correction. So It means that we've been able to account for this transaction. We've been able to account for this transaction. We've been able to account for this transaction. And we've been able to account for whatever transaction that's going to happen here. Likewise, this too. We could tell why that happened. But then, what about this transaction? What about this and this and this? What liquidity is responsible for it? Structural liquidity. Which is the liquidity for what? Continuation. Now, if you look at this here, you're going to see that this, for example, this black, for example, can be the higher time frame, which is the 1 hour, for example. Then the 5 minutes could come as the internal structure. So the 5 minutes could be something like this, higher high, then higher low, higher high, then higher low, higher high, then higher low, higher high. You could even do this, then goes higher, then higher low, higher high, 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 higher low. Sorry, I'm just in a higher low for everything. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, low, higher high, lower low, lower high, lower low, higher high, low. See that? Something like that. Okay. Now this, 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 this. Let's stop there. Now, if you have something like this and you mark your TO high, as most traders will do, and price comes all the way down, what do? You wait for BOS, the retest, and then that's where you more than likely enter that trade. True or true, everybody?
Yes.
Wait for BOS, the retest, then you more than likely enter the trade here, and then you continue higher. So you see, in the process of waiting for BOS and then the retest, what do you have here? You have this low and you have this low. In this case, what do you have? You have this low as the last low and this low as the main low. So this is the last low before the main low. Are we together, everybody?
Yeah.
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 This is the last low before the main low. And where did you enter the trade on? You entered the trade on the last low. That's where you more than likely will enter that trade. And when the trade goes in profit, you break even here. And all of a sudden, price comes down. You're like, oh, it's just coming down, gain efficiency, it's going to go up. But you know, it just keeps going. And boom, it takes you out of break even. And basically, you did that, it goes up again, taking out the last low before the main low. That's where structural liquidity is mostly seated on. Do you understand now?
Yes.
Yes.
So you see here, the last low before the main low, structural liquidity taking. The last low before the main low, structural liquidity taking. You see here, the last low before the main low. Price didn't get there. I did this so that you guys would understand that it is not always compulsory for price to come towards structural liquidity. But you know liquidity is there, so if price comes, you can act accordingly. Is it making sense now?
Yes, sir.
So this level here, if price comes here, you don't have to keep waiting. No, it has to go to the last. No. All you need to do is keep monitoring price. We said no MSU, right? No trade. Is that not what we said? So even with you having structural liquidity, it is not enough for you to jump into any trade. It's just a level for you to pay attention to. And once there is an MSU following through, that's where you have your trade. Does it make sense?
Yeah.
Good. So here, is price efficient or not? At this level here, is price efficient or not?
Yes.
Yes.
Yes, it is. And do you have an MSU?
Yes.
Yes.
So I will definitely buy that guy. I don't have to keep waiting for this. Do you understand now?
Yeah.
Remember,
Yes.
liquidity is sitting on every highs and every lows in the market. That means that there was liquidity here. On this lower time frame, there was liquidity here on this lower time frame. But if we start jumping into every Tom, Dick, and Harry, then we won't have a well-structured plan to follow in our trading. That's why you need to know where you are in the liquidity cycle of the higher time frame. Then once you know that, then you align it with that of the 5 minutes. So what did you see? For example, now, for this level here, what did I see that will enable me to pick this trade? Where am I in the liquidity cycle? The answer to this is I am in the what? SLQ on the higher time frame, right? Isn't it, everybody? So I'm looking for what? A buy opportunity right there. Then what happened? What did I see? I see 5 minutes efficiency. Then how do I intend getting into that trade? Perhaps there was now a 1 minute liquidity grab here, MSU. That's how I'll get into the trade. Is it making sense now, everybody?
Yes, sir.
You don't understand, please call my attention back. Now, what is my target? Clearly, this is coming from the H1 liquidity graph. The target will more than likely be the H1 liquidity level. We are in an uptrend, which means that there's a huge possibility that price is going to take out the next structural liquidity. So that will be my target. However, I'm going to monitor this last high before the main high here in case price wants to do something funny, and I'll edge my buy around there if I see an opportunity to.
Okay, makes sense.
I hope you guys are digging into it now.
Slowly clearing up. This is how you're able to ping pong, because you're able to identify the push, each push.
Yeah, exactly. So immediately price took out the structural liquidity. I'm like, okay, correction is likely coming partials out, but then I'm not jumping into anything until I see MSU. That's my 1 hour transactional liquidity grab, followed by that is the where, then the how, the what is, okay, now I have 5 minutes MSU, efficient pricing, then I sell that sheet here directly from the 5 minutes, or maybe I see an opportunity from the 1 minute, then I sell.
Hello?
Oh, and then I keep monitoring to see what happens next.
Yeah. You froze there for a minute.
Yeah, it got the
Can you guys hear me now?
Yeah, hear you now, yeah.
Yeah, not clear.
So now I said transactional liquidity is the where. The what is I saw 5 minutes EPA and MSU clearly. So how perhaps I can get in on the 1 minute or I can get in on the 5 minutes, because if this is an MSU, then this is the invalidation level here. There is no other level that it can mitigate above it, so I can tell this directly. Does it make sense now?
Yeah.
So if I sell this, where is my target? The next H1 transactional, the next H1 liquidity, which is possibly here. However, I know I'm in an uptrend, so this might not get to this level and reverse. So I'm watching for any possible reasons why price wants to reverse. Then I'll just try to jump it into it. Then I'm also monitoring all of these stores within this marketplace too, to see what's going to happen within those stores. So I would take partials in this cell. And while I'm even taking partials in this cell, when price pulled back here, that is efficient pricing. If I have what? A 1 minute reason to sell again, I will sell again.
So you're also seeing 1 minute MSUs again, even here.
Exactly.
Here.
That is exactly. So well, if you notice, before I talk about the 1 minute, I first look at the 5 minutes.
Yeah.
You guys getting it?
Yeah.
Yes, sir.
Good. Now, fortunately, price came into this transaction, structural liquidity, and what? I wait for price to regain efficiency. Now, at this point, the lower time frame, higher time frame is not efficient. You can see we can't consider this efficient until it breaks higher. Remember what we talked about in efficiency, right? Good. So now, sometimes you can pick the last low before the main low directly. That is at your own risk, and at the same time, it cannot be risky too. Why can you pick it? Because you know it's an uptrend. You can tell the trend given the higher time frame. So this is the last level, possible level price would need to mitigate before it goes up, except it is going to induce this low. So what you're doing is you're only picking it because you're already in the cell, so you're edging the cell. But never pick it when you are not in the cell already.
Where would you put the stop loss for that?
That's how I do.
Sorry, yeah, Yusuf. You know, you said it's at your own risk to take that immediately. Would you just?
I can't hear you though. I can't hear you. Your mic. You're breaking up.
Can you hear me?
You're still breaking up. Come again.
Can you hear me now?
Oh, you're breaking up, brother. I can't hear you. Can't hear anything anymore now.
Good question, Emil.
I'm waiting for you before we continue.
He's typing this question.
Should I continue?
Hold on. He asked you, where would you put the stop loss? You see the question in the chat?
Yusuf, I think it might be your internet because we can hear everyone. Okay.
Yeah, exactly.
Yeah, I can hear you now. Okay. I can hear you now, actually.
Can you hear me now?
Yeah.
Yeah, so what I was trying to say is, for that immediate entry, where would you put your stop loss? Would you just like have that open?
This one? This
Yeah.
one? My stop loss will be here.
On the low? Okay,
Yeah.
Yeah, okay, thank you.
You're welcome. So I can risk it, but if you don't risk it, that's fine. What do? You wait for the lower time frame to regain efficiency, and that was where they took out this high, and we can connect this low. So that's EPA. When price comes back here, I can now watch for what? The M1 to see if I have MSU, then I buy. Hope you guys have seen how time frame structural analysis work.
Yeah.
Yeah.
This and more is the reason why I always advise never to sit on your screen and be trading money tonight. You have the perfect understanding about the market. You understand every infinite of the market. So why don't you just sit down for an hour or two, make 10, 15, 20%, and then get out. Go do other things and resume tomorrow.
Yusuf, would you say that there is kind of the best time to trade within the day?
There is no best time to trade. The algo is the same across all timing. Just look for the best time for yourself and then stick to it.
Okay.
That was a question I had. Do you, I don't think you do, but just a confirmation. Do you worry about the Asian range and the New York Open, London Open, and London close, all that stuff?
No, I don't. The algo is the same thing. It doesn't change across those timings. I've looked into it and I tell you, it doesn't change anything.
Sure.
It just still works with liquidity and efficiency.
Still providing the same moves. Doesn't matter if it's
exactly. I have students who trade just Asian session. I have students who trade just New York. I have students who trade just London. Everybody sticks to his time and they kill it. I have students who haven't had a losing trading day for the past 3 to 4 months. It all boils down to understanding and discipline. Now, you see, again, here, transactional liquidity taken, correction is expected, boom. Price came here, regained efficiency. You see, we don't have to start saying, oh, we have to wait for price to come here. Boom, price gave you MSU, I'm buying that shit. Does it make sense now, everybody?
Yeah.
Yeah.
I hope it's interesting too.
You hope what?
I hope it is interesting too.
It's very interesting. I'm just
very. We're just like we can understand like it's pretty mind blowing.
I'm just sitting there thinking that you are in the process of giving us the keys to the kingdom.
Exactly.
I can't understand how you develop all this. Like it's amazing. Like really.
Honestly, I don't understand myself too how I put all this information together.
And we still haven't touched on algo structure yet.
Yeah. So everything that I've been teaching you together is what makes up algo structure. So algo structure is just like a graphical representation of what the market could look like. Just like this is similar to what algo structure is, but this is in time frame structural analysis.
Amazing. Amazing.
Just a question, Yusuf, have you ever tried trading Asia?
Me? I haven't tried it for once because I'm always sleeping when it's Asia. I love my sleep, except I'm learning. It's only when I'm learning that I don't sleep because my mind is not at rest. I really want to find the knowledge there. So, but I don't trade Asia. However, I have students who trade just Asia, and it's still the same thing.
Yusuf, one question. There is like an explanation why it's in particular the last high or the last low before the low or the high?
Yeah, there is an explanation, and that was exactly why I explained here. Do you remember what I explained here? Or should I go back
yeah,
again?
right. Yeah, right. Yeah, the break-even.
Yeah. Don't worry, I'm going to go on chat. I'm going to Okay, I haven't, because I haven't started trading, I haven't subscribed for my TradingView Premium, but I'm going to show you guys yesterday's price action and into today too, and you see how everything was applicable, okay?
Yeah.
Yes, sir.
Let's go. Let's go.
Let's go! We're going to smash it, man. None of these pairs are safe anymore. Even news, it doesn't matter. News follows the algo every damn fucking time. Now, it's remaining one, inducement liquidity. Now, when you are in an uptrend, okay, when you are in an uptrend, you have higher high, higher low, higher high. Inducement liquidity is always sitting, this is a low, this is a high, this is a higher low, and this is a higher high. Inducement liquidity is always sitting in the new higher low being created in the market. So if price comes here and then goes up again, so it means that the inducement liquidity has moved from here to here.
Mm.
It is no longer here anymore. Is there liquidity here? Yes, there is. But in this case, the liquidity in this market now would be inducement liquidity, and then the last low before the main low, hence you have structural liquidity here. If price goes further and does this, didn't break that low, and it goes up again, then inducement liquidity has moved from there to here. It's always in the new higher low for an uptrend that the market that's been created in the market.
Okay, so the question, let's say price.
So I'm coming, please. So looking at this market, if this is the inducement liquidity, this is the last low before the main low. So what is here? Here is just the liquidity. We won't pay attention to here significantly, but we know markets can react. But the two key levels to pay attention to is this one and this one right now. Does that make sense?
Yep.
Yeah.
I hope you guys are getting it now.
Yeah.
So don't ignore this. Know that there's liquidity here. That's why I started teaching you everything from the scratch. But the liquidity here is not as significant as the one here and here. If price does this again, this is inducement liquidity. This is last low before the main low. There's liquidity here, but they are not as significant as this one and this one. And mind you, if you look at this, this is the 1 hour push. So the internal structure is what you always use to determine the liquidity in that level. That's the structural liquidity in that level. Is the internal structure that determines it. So which means that in this push entirely, this level is what will determine the structural liquidity for this push. This push also has its own what? Structural liquidity. In fact, it has not been taken. This one too also has its what? Structural liquidity. So what we have now is every push here has its own structural liquidity. Do not forget that this also is one push like this, which also has its own structural liquidity. Because price is fractal in nature. I hope that's making sense now. Everybody's getting it. And I hope I'm not too fast for you guys. I'm taking it slowly.
Can I ask my question now?
Wait a minute.
Okay.
Let me finish with inducement liquidity. Now, here, price comes here. This time around, it takes it. And when it takes it, boom, 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 price just keeps running. If you notice, if you took a screenshot of what I taught earlier, internal and external structure, you would notice that almost each time we had inducement, price makes even a longer push. When price takes inducement, it tends to expand more than the normal structural push. That's why it is the liquidity for expansion. And the reason for that is this. Remember when I was talking about this, when I was giving you guys the supermarket scenario, right? I said something. I said, if an item costs £100 and you pay £100 for that item, how many items do you get? You said one. What if you want 3 items? How much do you pay? £300. Why? Because you are creating more value, more liquidity. Hence, you need to get what? More items. So if you have this level, you have, you have structural liquidity here, which is sitting right here. You have inducement liquidity here. Can you see why this would more than likely give you more pushes? Because you have one liquidity, you have £100, you have £200, compared to you just having £100 to give this push. More value, more push. More money, more push. And in some cases, remember this structure also has its own structural liquidity. Price could come all the way to grab this one too. And then it gives you even more push because it has grabbed multiple liquidities. There are still some people who still have their break even here. Is it making sense, everybody?
Come on.
Yeah.
Yes.
Yeah.
Yeah.
So, price is fractal in nature. You should also understand that the value of liquidity on the higher time frame is more than the value of liquidity on the lower time frame. So that's why the bigger the value, the bigger the transaction. If you have a higher time frame liquidity graph, you're more than likely going to have a big push. That's why the trading plan states that you should know where you are in the higher time frame liquidity cycle. Because once you can tell where you are, it means more than the next target of that higher time frame liquidity cycle is going to be a major push, right? So in that major push, you can easily enjoy directional buyers on the lower time frame to drive it into that higher time frame liquidity cycle level. Interesting, I know.
This is probably the holy grail we all have been waiting for.
I know, right? It's a crazy market, man. Really crazy.
Really.
And if you wait patiently for your trade setup, I guarantee you would find at least 1, 2 trade setups daily that will give you an average of 10 to 15% cumulative, and you'll be fine. Within your trading time, and you'll be fine.
Wait, Yusuf, can we see like how to take a real chart?
Of course, like I said, just digest everything. I'm going to show you to you on chat now.
Yeah, thank you.
Yeah, and you will even see more when we start doing our port testing session. I just want to finish with you guys, then I start having the port testing session with everybody, because the other guys haven't had their port testing session yet.
Which session?
Forward testing session, where I play the price forward with you guys and I show you how we apply everything.
Okay.
Yusuf, can I just check roughly what time you think we'll finish for today?
We're almost done. It's just once we jump on chat now, I'll just show you some examples and then we'll call it a day.
Oh, okay, no problem. Thank you.
Antoine, you can ask the question you wanted to ask.
Okay. You kind of answered my question, but I just am going to ask anyway, just for confirmation. So going back to day 1, you said there is no false break of structure without inducement, correct?
Yeah, exactly.
Right.
And there is no inducement without false break of a structure.
Right, correct. So earlier, a few minutes ago, you said when price comes down here, let me change my color, sorry. So when price comes down here and breaks and takes its inducement, this now becomes false break of structure, and this is our inducement, then we go up, correct?
Yes.
Yeah, man. Yeah, okay. Now
that's why the inducement is always sitting. You get it? That's why the inducement is always sitting in the next higher low, because once it takes it, this becomes a thick break of structure.
Yeah, coming clear now. Understand.
And in the downtrend, the inducement level is always sitting on the new lower high.
I have one question. I don't know if it's silly or what, but how can you differentiate between a true break structure or a fake one?
Don't draw break of a structure. Don't draw fake one. What you know is that once price is in an uptrend like this, the moment price takes this level out, we're going to see this as what? A fake break of a structure, and this as an inducement. You don't know until it happens.
Yeah. You won't know until an inducement is taken. So the liquidity is taken.
So what you know is that, oh, I'm not going to pick this trade here. I'm going to pick this trade here if it takes out this low. Because I know if it takes out this low, this becomes the false break of the structure.
And price doesn't necessarily have to come down to here.
Yeah, it doesn't have to come down to here. So the price can come here, and then you watch closely, and then it gives you something like this. And you're like, okay, now I'm buying because this is what false break of the structure, this is inducement, and this is efficient price action. So I'm buying this.
Yeah, because price could miss this POI right here. Shit, sorry, hold on one sec.
No problem.
Price could miss this POI right here and then just come down here and then go up, right?
Yeah.
Yeah, man.
Let's say you want to take the sell from the top, and you should wait for the MSU, right? Like, I don't know, let's say like this one is a true boss, and here you will wait for an MSU.
Well, I haven't taught you anything like true boss. So.
Yeah, ignore the bigger structure.
Okay.
Yeah.
Okay.
If you wanted to sell anything here, you wait for price to come here, then you watch closely, and then now you
MSU and an efficient price. Okay, yeah, makes sense. Makes sense.
All right, so let's quickly look at the market and then we can call it today, okay? But while we're doing that, let's wait a little bit for Anil as he's visited the toilet so he doesn't miss out.
I might as well ask a question I've been thinking about for the past few days.
Please do.
What is your, I mean, I don't know if you want to answer this on a community call or whatever, but what is your goal, your future plan for Algo with regards to students? Because most mentors, they got like 100, 200, 500, they want to get as many students as possible. Like, do you have a max, or are you worried about that?
In fact, finish. I'm actually concerned about my students than teaching, actually, because I prefer the progress of the individuals in the community. I really want everybody to be happy. I want us to be one big family. And because of this mentorship course I've been having lately, I haven't had enough time to actually have calls, community calls, and I really feel bad about it. So it has made me to review a lot of things, actually. One of the reasons why I haven't really put anything out there is because we're restructuring everything. Our website will be up and running by month ending, so by next week probably. We'll be sending out the Trustpilot link by weekend for people to fill and all of that. And yeah, I would have stopped teaching actually, because I don't necessarily need to teach. But the thing is, there is no other passion I have other than teaching. I love teaching. Okay, I hate trading. I don't have passion for trading. I don't, in fact, I get tired of trading, so I hate trading. So, but if it is teaching, I really enjoy it. Keeps me, keeps me going. So that's the thing. But then, what's the essence of teaching when some people understand, some people don't understand? I want everybody to understand. I want everybody to really know this thing, and that's why the mentorship, as from next year, like you must have seen in my Instagram, is going to be the next mentorship is actually February. The mentorship is going to be holding quarterly, every 3 months. So it's just going to be 4 times a year. And it's going to be a limited seat of 10 people actually per mentorship session, per boot camp. So February, only 10 people can enroll. I don't want so much people in the community so that we can be few and I can attend to everybody one at a time. So we really become really, really good, because boot camp is never enough. The follow-up calls are actually the end thing. The boot camp is like the foundation to the whole understanding. So that's the thing. In terms of students, I really want everybody to be successful. So I'm going to dedicate a lot of time to that.
Because one thing I've noticed with most mentorship programs, the more people that come on board, there's a greater chance of stuff being leaked. Because unfortunately, the good thing is that the Forex market is a $1 trillion business. It attracts a lot of unscrupulous, not loyal people.
Yeah, you see, the thing is, being leaked or not, whatever is going to get leaked in terms of education will get leaked. But the value of any education is not actually in the leaked courses, but in what is being shared within the community.
Yeah.
You see, a number of people have reached out to me because they heard about my fake VOS and inducement from somewhere. That's something getting leaked there. But it always brings you back to me. No matter what, that's one thing about the approach. No matter what you learn, you would only be able to apply to an extent.
Yeah, true.
Except you're guided. So that's the thing. So I don't want so many people in the community. Just 10 people every 3 months. That's fine. Just to keep my passion going for teaching. That's all. I actually wanted to cancel it, but I had a meeting this morning with some close colleagues of mine, and they're like, so think it again, because you love teaching. That's the truth. So it won't be nice if you cancel it completely, but you can reduce the number of seats that will be available so you can have time for everybody, because I'm people concerned actually. So that's it. Okay.
Yeah, all right.
Yeah. Good. So I'm looking at this day. I think this day, this is 7 a.m. and for today, this is 7 a.m. So everything here is perfect. This is yesterday. So now, if we look at this chart, sorry, I can't put it on replay mode now. But if you look at this chart, we already know what we already know. Okay, let's not say we already know. Looking at this chart now, ask yourself, where are you in the liquidity cycle? If you follow through, you see we are this low, got taken, right? Then made this high, then this low, then made this high, then this low, right? Then price came all the way here to become efficient still. Everything is pretty much efficient. So right now, price is pretty much delivering bearish, and you have this low next. Everything here is efficient. So price from this level can actually keep delivering bearish, especially when it has taken the liquidity sitting on this high. It didn't get to where. Now, in this case, price just took out the liquidity sitting on this high. That's all, because the next inducement was here. You see that? But we can still classify this as an inducement liquidity and this as noise. But for us to do that, we can't use the 1 hour time frame. We have to see, that means what we can say is that the 1 hour is complex or it is noisy. Don't worry, get to the standard one, get to algo structure. Then we'll go to the 4 hour and try to define it properly. So on the 4 hour time frame now, we try to see where we are in the market. This low got taken. The oil price it was pulled back to regain efficiency. Can you see that? So we are still delivering bearish. So what I need now is my lower time frame MSU around here to see how price goes to determine if I'm going to sell or if I'm going to buy here, which I cannot buy here because I can tell that we're still delivering bearish. Can you guys see that clearly now?
Yeah.
Okay, thank you. So if I come to my 4 hour, no, let me go back to the 4 hour. If I go to, so in this 4 hour, I'm just going to do this here, mark this level here. Okay. Now price came to that level clearly, and what did price do? Given the 4 hour time frame, given the 1 hour time frame, if you look at this, can you find anything significant about this? No. Because what I'm saying is, if you look at this, the last low was here, then it led to this high. Everything is still sitting within it. All of this is nothing but substructure, which means for me to be able to read this substructure better, I need to go lower, right?
Yeah.
So let me try 15 minutes. Now, when I get to my 15-minute time frame, what did I see? On 15-minute time frame, clearly, I'll be able to tell that, oh, there was a high, there was a low, all of this, you know, we have all of these highs and lows. Okay, let me just mark it out. We have this high, we have this low, it got broken here, then we have this high. So everything in between here, we say technically was a substructure thing. It got broken here. Then when price broke here, this was the last high before the main high. Can you see the liquidity got grabbed?
Yeah.
Yeah.
Then what happened? Price continues. I'm trying to, this is the day we want to trade here. I'm just trying to, you have to understand the story from the previous day that led to this day. Okay, then we have this low here that got taken there. Then price continues from here. I'm not interested in anything here, so I'm just marking it up. Continues like that, whatever. Then when it got to my trading day, price grabbed this liquidity and started correcting. So that was transactional liquidity there, isn't it? Then the correction happened. If you go to lower time frame, that's big BOS, inducement, mitigation here to continue higher. Can you guys see?
Yeah.
So if I buy this guy, for example, so on my trading day here, I can see now what is happening. Transactional liquidity graph paths. I'm looking for, I can buy here, but I also know that when price took out this low, this pullback here is also making this efficient. So I'm looking for sell opportunities too. Do you understand now, everybody?
Yeah.
Good. So that's EPA there. And I like, when price come here, I'll pay attention to that. All of this, oh, so much noise, blah, 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 blah. I'm just going to wait to see what happens. That's all. I can't do anything about it. Then I go to my 5-minute time frame. You see, I've been able to tell where I am in the market. When I get to my 5-minute time frame, right here, I saw that the US that was on the, what's the name? You see, on the 15 minutes, I saw that big US. On this 5 minutes, I see nothing. This here, technically, is higher than this rather. This was not lower low. This was not higher low, higher high. This was higher low. This was relative equal highs, or it was just below it. So I'm not going to count that to be anything. Are we together? But I would see this as price regaining efficiency, because clearly, if you look at, we have this guy break this high, then it drops, then it went up to this level, then finally this guy drops. So what do I have here? I have this guy coming lower to that efficiency and what? Inducing that low. Can you guys see it?
Yeah.
Yeah.
Okay, so if you did not see it well, let me draw it out for you. You had this as your efficiency, then you had this high, this low, then this high. This is still within this one, so then you have this low. Take DOS inducement. Perhaps it's going to push up here. Then I do what? It was now falling into my trading time, which is not a bad thing. At that point, I can go to the 1-minute time frame and look for a buy opportunity there. So, boom. This is the 1 minute. I missed the buy. When price pull back, I'll sell. I'll buy it from here. Is it clear?
Yeah.
Yep.
And there goes the buy. This buy, immediately price takes out this high. Here, I'll take partials, because if you look at it, we are, the higher time frame says what? We are delivering bearish. Remember, we did that. It says we are delivering bearish. All of this is just on efficient prices. So I'm looking for a sell opportunity majorly, not buy. But what if the buy continues higher? Then that's fine. I took partials. Then if it continues and it shows me the intent clearly, then I can also follow the algo and join the buys. Is it making sense, everybody?
Yeah.
I love this day because it's not even so clean. So that's nice. Now, price continues higher. As it continues, what am I looking for? As it continues, what am I looking for? I'm looking for price behavior into this supply here. I'm looking for that liquidity graph of this supply here. So I'm looking for a where is the target? So now price just continued higher, higher, high, higher, low, higher, high, higher, low. Sorry. I'm going to monitor that. I know it's very efficient. I'm going to monitor that on my 5 minutes. Like I said, it's the key time frame for intraday trading. That's why I'm going to monitor it. Then it goes higher, high, higher, low, higher, high, higher, low. When it comes here, I don't have any MSU into this supply yet. I'm going to monitor here again for a possible buy opportunity. Let's see what it looks like on the 1 minute. Of course, I already took partials. Then here, what do you have? You have price cream here. and then it took the last low before the main low. Can you see it?
Yeah.
Was it a coincidence? Hell no.
No.
Then from there, we had higher high, higher low. Higher high, price didn't give me an entry, and I'm annoyed. Oh shit, price didn't give me an entry. What the fuck is happening? Oh, this price is a bitch. Oh. Then, you know, I'm very patient. I waited patiently till price came here, and this induced it. Can you see that wick?
Yeah, it was so small. Click that.
Yeah, exactly.
Yeah.
So you are that high, this low, this high. You can see nothing was higher than this. Boom. Take POS inducement. When this was rejecting here, smash it with the buy. See that? Then while all of that is happening, okay, I was looking for a sell. I'm still looking for that sell opportunity. I just haven't seen any. And I'm not going to look for it on the 1 minute. Do you see what I'm doing? Did I look for any trade on the 1 minute just now? No. 5 minutes, then 1 minute to look for it. I go to the 5 minutes again. I'm like, okay, I'm still holding this buy, of course, partials out because I know anything could happen. Then while I'm still holding this buy, all of these levels, nice levels, boom, price grab the liquidity sitting on this high, which is the main high actually, that led to all of these pushes here. Liquidity, price just grabs that liquidity. If I sell this, that is a risky sell, so I won't sell this actually. Okay, given my 5 minutes, I won't sell that. I know liquidity has been taken. It could happen that this would sell, but the only reason why I would sell this is if I have MSU to sell. Does it make sense, everybody?
Yeah.
Yeah.
So what happened? Oh shit, price just came back, took me out of break even. But then when it took me out of break even, I know my last structural point was this high, this low, this high, this low, this high, and then this low. Is this efficient or not? It is clearly efficient, right?
Yeah.
So if this pulls back here to this marketplace, is that efficient or not to sell?
Yeah.
It's efficient. If you don't understand, please let me know. Contribute. I appreciate it a lot. Then once it comes there, I switch to my 1 minute. I'm like, what the heck do you want to do now? And I'm like, okay, efficient price action. Price goes there. Since it's efficient, how do you intend delivering bearish? And I thought, wait a minute, it comes here, gains efficiency. Oh shit, it's going. Oh shit, it's going. It's coming back. Oh, nice. Inducement, that's my sell. EPA, then MSU. I know we're still bearish. I hold this up. Then I go back to my 5 minutes after we took out that low, where I see price went lower, right? Then it's coming back again. Is it efficient?
Yes.
Everybody?
Yeah.
Efficient. So I can, that means I can sell, right?
Yes.
That means I can sell, right? Good. But will I sell?
We don't have MSU.
Okay, you have to look for the MSU to sell. Nice. So I jumped to the 1 minute. I'm like, what? come on, please, give me MSU. I'm begging you, please give me MSU. And it goes up. I know correction was coming, so if I had seen something tangible here, I'll be nice with it. But you know, nothing. And oh shit, nothing. Okay, I'm selling that shit. Now I have MSU on EPA. See that?
Yes.
Everybody is looking like it's magic or something.
Where's your FBOS?
Look at it. Look
There
at
is an up candle there.
Can you see this candle?
Yeah.
What liquidity are you targeting?
What is it? What is it? At this TP, the TP here is a free fall. It is best you take your partials, because if you go to the 1 hour time frame, you would see that what we had here is what a sustained downtrend, which means, and given this sustained downtrend, can you see anything to the left? No, you can't. And more importantly, given where price is coming from, the last transactional liquidity was here. So we've been expecting a correction after this low was taken. When price reversed and came here, we're still expecting a correction. Now, which means that the liquidity that this might still go to might be down lower, or price could reverse anywhere here. So you want to take partials consistently as you're having that free fall. That's why it's important to know where you are in the market. It's different from if you catch a trade here, you know you're targeting this last low before the main low here, and then this structural transactional liquidity. But in this case, everything is shallow. Do you understand now?
Yeah, so or you can just wait for an MSU in the opposite direction to like close all of it.
Before you buy, till you close everything, well, that's left to you. If you want to do that, me, 10 pips, 15 pips, 12 pips, I'm taking my 80%. I'm fine with it. That is 10% for me, actually.
Okay.
Yeah, that's it.
Okay.
So after the transactional liquidity, you wait for 5-minute MSU.
Exactly. Yeah, you're getting it, brother. Nice one, Nick. So now, you see, price came lower, and when it came lower, I'm like, wait a minute. Transactional liquidity graph, of course, this is 5 minutes, making corrections to the upside. And while it was busy doing that correction, I'm like, okay, the next efficiency is here, which is the next marketplace. Then I'm like, okay, what do you have for me? It didn't get there, but when it pushed up, the last low before the main low was here. It grabs that liquidity. I'm going to switch to 1 minute to see if I can find a buy here into this efficiency. Let me put this line here. So when I get to my 1 minute, see, the 1 minute didn't give me an MSU to buy, so I'm not buying. Can you guys see that?
Yes.
Yeah.
The 1 minute didn't give me an MSU to buy, so I'm not buying. That's it for me. Now price came here. Remember, finally it came here to regain efficiency, isn't it? And when before it regained efficiency, do I have an MSU into that supply, which is the efficient supply? And if you look closely, yes, I do. We had higher high, higher low, right? Higher high, higher low, higher high. So this broke lower, take BOS, and this broke higher, inducement. So which means I can sell this directly. But where will I put my stop loss though? It's dependent on the 1 minute, and it is dependent on your entry style. I have an entry style that I call the rejection candle, and given that entry style, I can actually enter on the 1 minute, on the 5 minutes from here, because I see it here right now as we're analyzing, or I can go to the 1 minute and look for it. I can't show you what it is now until we get to that level. I hope you guys understand that.
Yeah, that's fine.
So yeah, on the 1 minute, the rejection candle isn't there. So I would have entered based on combining the 1 minute together with the 5 minutes. So price drops again. See that? Then it grabs transactional liquidity on the 5 minute. I'm like, I take partials and I'm like, wait, does the correction wants to happen? Well, we're still flowing bearish. I don't really think I want to jump into any easy correction except I see 5 minutes reason to buy. Do you understand? Then
So can you repeat that?
now this was transactional liquidity from the 5 minutes, not the H1. What I want to see is transactional liquidity grab on the 5 minutes, on the 1 hour, then 5 minutes MSU to buy.
Okay. Yeah.
You see, if you notice, you see what I'm doing. I'm trying as much as I can to avoid every noise in the market and stick with that bigger bias.
Would I be right in saying then if there's no MSU, there'll be no trade?
Of course, we've said that like 3 times. No MSU, no trade.
Just making it.
Yeah, sure, man. Sure, man. So you see, price comes here, correction. I'm like, okay, when you took out this low and you're correcting back, are you going to trying to give me an efficiency for me to sell?
There is efficient there.
Yeah, of course. So I'm going to go to the 1 minute and look at what it is doing here. Perhaps I'll get another sell opportunity. Can you guys see how it works? Can you see how useful the 5 minutes is now?
Yes, sir.
Now, when I got here, this is the point you got efficient and it came higher. High.
Pretty messy. Yeah.
Yeah, you see that? So when it is messy, I don't even disturb myself. I just wait for it to be clear. Then you see it went there, and drops. Didn't give me an MSU. I'm like, oh shit, bro. Part of it. Then what happened next? Price went higher, causing fake POS on 5 minutes, inducement, and then what? Mitigation. You see that, everybody?
Yeah.
And mind you, all this while, we're already sitting on that weekly demand that I showed you guys earlier, or you can even call it daily demand. We're already sitting on it. So a buy could happen at any time too. So we're watchful. Now, we look at that 5 minutes, you switch to the 1 minute again. They're like, okay, that inducement happened where? It happened here. Then you say, okay, how is price living? Price came here. You see what price did? Price came here. You see, grabs the last high before the main high. Now, somebody will say, isn't this the last high before the main high? This is what I do. If the last high before the main high is relatively close, I combine it together and I use the one that is farther from it. Do you understand, everybody?
Yeah.
So that's why I do, because ideally, there's a huge possibility that most people who are in this trade, okay, would have gotten stopped out here. But that's that. Now, but let's leave that out. Price came back, mitigates that efficient supply, then give us lower low, lower high. Sorry. Give us lower low, lower high, lower low, lower high, lower low, inducement, my sell. Can you all see it now?
Yes, I have one question about the structure there.
Please ask.
You have this, like, this wouldn't be the swing in this case, and the structure of liquidity.
You don't have to force it. That's exactly what I'm saying. Do not force it. Go to the time frame that the structure belongs to. The structure belongs to the 5-minute time frame. When you get to this 5-minute time frame here, look at this low. Okay, look at this low here to this level here. Is this lower or not?
Yes.
Okay, so this is lower, and okay, I think I get what you're saying now. Now, no, yeah, we're still on the same page. Now, if that is lower, this is the previous low. This is what the previous high. This is the new low. This is the new high. So you have this high, this low, this high, this low. Isn't this the big BOS and this the inducement?
Yeah.
I hope it is clear now, Nick.
Yes, I will have to practice structure.
Yeah, you see that I'm saying structure can be really, really tricky, man. So there you go. For those of you who have something to attend to, don't worry, we're almost done. Then price goes all the way there again, lower. Of course, Basha's out. Let me tell you something. You see this trade? Everybody, you see this trade, right? You can see how easy this trade was. Giving us all the plan and everything. Can you see how easy this trade was? This trade was a 23 pips trade. I use fixed lots on my trading. This trade is 23% for me. You don't need to catch all of the trade. This trade is 32%. At 10%, if you close your full volume, that's fine. At 15%, if you close your full volume, that's fine. It comes with understanding. This trade was 30% to this level. This trade was 35%. This trade was for 10%. You see how it works? Like I will tell you the same thing I always tell everybody. I am not teaching you to catch every move in the market. I am not teaching you to catch every move in the market. I am teaching you to understand every move in the market. It is now your job to catch those trades that fit perfectly with your personality, with your timing, with your trading plan, and remain consistent with it. Don't try catching every move in the market so that Yusuf can see that I'm really, really good. No. What I'm really much concerned about is your psychology and your consistency. If you're doing 5% consistently daily, that is better than you ping-ponging the market all day. Does it make sense, everybody?
Yeah.
Yeah.
It does, man.
So,
yes, sir. Sorry, just a quick one. Would you say there's still a higher probability of still going with the trend because a lot of these trades are still shorts instead of longs? Would you say that you still apply that? We
haven't seen an opportunity to go long. So if it goes long and it smashes us out, that's part of it. It's called the good loss.
Okay.
I'm still looking for a long opportunity myself too.
Yeah.
Remember, I was looking for it, I didn't find it because if you look at the higher time frame, let's go to the 4-hour, for example, at that level, we know that a buy is coming. Look at it to the left. And to the left here, the last low before the main low is sitting right here. Allow me to zoom in here. See that? So that's the last low for the main low, and price is still on this demand here after getting into this higher time frame demand too long ago. So you see, we know that we are already on the demand. We are looking for buy opportunities already, as much as the seller is still presenting itself. So whichever one presents itself, we will just get into it and then we'll flow with the market. Okay, so here, this level here is not even as easy to trade as these other levels here. Meanwhile, that level that isn't as easy to trade, we've already calculated over 100% just now. Does it make sense now? So the algo is like that. Okay, the algo is like that. Let's say, and one of them.
You
Now-
never saw, like, sorry to ask, like, two MSU in continuation?
You know, I mentioned it earlier. Do you remember? I said you can sometimes have something like this, the MSU. Okay, can you see that? Still got
Yeah.
induced. And as funny as this is the best market to trade, a ranging market. You don't have any business if your MSU gets MSU, because when this level drops, you are already aware that this is the new lower high, and that is where the inducement liquidity is currently sitting now. And this is where the transactional liquidity, immediately this one is taken, you're looking for buy opportunities. That buy opportunities could actually lead to taking this one. That's fine. Then you look for sell opportunities, and that's how you can inform the market.
Yeah. Yeah, you still wait for the MSU, so it's pretty
Yeah.
safe. Yeah.
Exactly.
Yeah, you're right. Yeah, because you're looking that structure in the 5 minutes and you're waiting for the MSU in 1 minute. So
Exactly.
yeah. Yeah.
So you see, we're in this demand. We don't have the price behavior. Sorry, we haven't gotten there. That's algo market structure. I'm already going with the flow, man. So we don't have an MSU to buy yet. Can you see that? We don't have an MSU to buy yet. So we're still watching to see, but we don't have any demand, so we're watching to see. There. Price drops, and I look for buy opportunities again. And in looking for my buy opportunities, all I have now is this high, this low rather, this high, and this low. Then all of this is substructure. When price took out this low, within this substructure, I have my last low before the main low. Do you see that?
Yes.
So what I have here, the next inducement was here. Can you see that? So price induces it. What do? I go to the 1 minute and I look for sales. Then I recognize this level too as my last low before the main low. So I'm going to watch here for buy opportunities just to hedge this sell. If I had that same thing here, I would have watched it to hedge this sell because of what I am in the higher time frame demand. Is it making sense now, everybody?
Yeah.
A quick question.
Yeah, please ask.
So
1
the
minute.
last 1 minute.
Yeah, go on,
Yeah.
I'm listening.
So when you were explaining the last cell one. So can you explain where is the MSU setup there?
MSU setup.
Yeah, the last cells.
That's your 5 minutes. You have lower low, lower high, lower low, break high, break the low. So where's the new lower high? The new lower high is here, isn't it?
Yeah.
And that's where you have the inducement liquidity. Did it get taken or not?
Yeah, it did.
So we can look for sales. And in this entire push, we have structural liquidity here. So immediately we have that inducement. I don't need to, you see, that's what exactly I'm saying. I can sell it directly from here, from the inducement, my stop loss goes there, or I can just watch how price reacts here, then I sell. I don't need to start looking for 1 minute MSU. Just a push and a retest, I can sell. So I can actually come here and then sell from this candle directly. But unfortunately, I can tell you something. I would more than likely miss this sales because of the stop loss. It's too big for me.
I can't see. What's the stop loss?
The stop loss is 3.5 pips.
And that's too big? Oh, wow.
What's your maximum, Yusuf?
2 pips.
2 pips. Okay.
You never use seconds for the MSU?
No. Okay, so you catch this sell, and because this stop loss is too big, well, I go into hunting mode. Actually, because I see the trade is going, then what I do is I'm going to come to this. I know the substructure is here. That's why it's always good to pay attention. And I'm going to start monitoring the substructure to see if it gives me an MSU in between, and then it goes lower low, lower high, lower low, boom, MSU. Then I begin to look for that trade here. Perhaps I'll get a better stop loss. Do you see that, everybody?
Yeah.
Yes.
Yes. I hope I'm not too fast. And there you go. I would still miss the re-entry because the candlestick pattern that I use in selling didn't come up here. So that's fine for me. Okay. Then price drops. You see price drops. When price drops, it was expected for price to take out this level is going to continue lower, but rather it respected structural liquidity here. Does that mean I'll buy here directly? Hell no. It means I can start monitoring to look for buy opportunities. Where do we do that? On 5 minutes. So what do we have? We have price grabs that liquidity. Price goes higher high, higher low, higher high, boom. Somewhere around here, I'm going to start looking for my buy opportunities. See that? Then, if I catch that buy, we start buying. So where's my target? I am going to be targeting here first, which is the next structural liquidity. Then if it breaks there, then I'm going to hold that trade and see what evolves next. But more importantly, I'm going to switch from my 5-minute time frame to my 15 minutes or my 1 hour to see what the liquidity cycle is looking like. Again. So if you look at this right now, on this particular time frame, on this 15 minutes, you have the structural points are too much for me, man, to tell what the liquidity cycle looks like there. I go higher where there is less noise. So coming here, I can tell the next inducement liquidity is here. You see that? So that's better for me. And the next structural liquidity is here. That's better for me. So those are the levels I'm going to target next for that buy.
This is the liquidity cycle, or there is like...
That's the liquidity cycle. The liquidity cycle is about you following everything I have said on the higher time frame and delivering the lower time frame into those levels, using the same way that you looked at the higher time frame, avoiding the noise in the market. So if you look at this now, if you look at this, we're in the buy. We don't know. We know this is a higher time frame demand pretty much, right? You're in the buy. If you catch that buy, for example, where do you target for this buy that you've got? You see, it becomes tricky because you have this low, you have again this low, you have again this low. So where do you target? And this is a higher time frame demand. So more than likely, this is going to a higher time frame supply. A higher time frame supply will more than likely start from the H1. Do you understand what I'm saying? So in that case, if you go to the H1 to see if there is less noise, then you go with it. If there is more noise, you still switch again to H4. So in the H1 now, if you look closely, you see the previous low was here. So all of these pushes together, lower low, lower high, then lower low. So the next inducement liquidity is where on the lowest US lower high, and the structural liquidity is where on the last high before the main high. Everybody see it now?
Yeah.
I would say ignore this candle, this particular long candle here. I would say ignore it. In this analysis you are doing now, don't allow it to distract you. This might be a false candle because that is more or less when price, that was the changeover session. Sometimes the market can lift, you see, I see by name, that was changeover session. So it could be a false candle. If we check another broker, let me check Wanda, for example, it might mean something else entirely. You see what I'm talking about?
Yeah. Mm.
Is it clear, everybody?
Yeah.
Yeah.
At least to that extent, it is clear.
Lot of.
All right. A lot of
We should practice.
So liquidity is not equal highs or equal lows. And there is nothing like relative equal highs or relative equal lows. What you need to pay attention is price level. If a level is not taken, it means there is still liquidity there. There is nothing like relative. Oh, it is relative. Look, if you have this high, and then you have this high, and then you have this high, this is not relative. What you have here is a high with liquidity because it has not been taken. A high with liquidity, it has not been taken. A high with liquidity. The moment this is taken, okay, what you have now is there is no more liquidity here. There's no more liquidity here because both of them are taken, but there's liquidity here and there's liquidity here. Is it clear, everybody?
Yeah.
So never ever treat anything as relative or equal highs or equal lows. That will be all for now, guys. I really appreciate your presence. I hope you guys got a lot of value, and I hope this helps you become a better trader that you deserve to be. You can take a screenshot and do have a wonderful weekend.
Thanks, boss.
Yes, boss.
Thanks very much. Thank you
You're
very much.
welcome. You're welcome. You're welcome. You're welcome. You're welcome.